Let's speak about Apple's 4-to-1 stock split and what it means for us investors. What is happening, investors? It is your boy Jack. I am not a financial advisor. I got the hoodie to prove it. And today we're going to be speaking all about Apple and the upcoming stock split. Apple is not new to doing stock splits. They've done 4 in the past and it has worked out very well for the company each time. In today's video, we're going to be discussing the advantages of a stock split and why it is that Apple is actually doing this, what it will mean for you if you are a current investor or an investor before the split happens, what will happen to your shares. And while we're speaking about splits, I also want to speak about their history of share buybacks. We will take a quick look at their quarterly earnings report, and we're also going to go through some growth catalysts that Apple have on their side. For me personally, Apple actually is in my top 3 biggest holdings, so seeing some news like this gets me very excited. So right before we get all into the stock split, can I please ask you to smash a like on this video, as it genuinely helps me and the channel out so much. Please hit that juicy red subscribe button, people. We're 400 subs away from 20,000. That is crazy to be saying, and once we get there, this merch is going live. And of course, please do drop me a comment down below. Let me know what you think of the video, and also let me know if you're involved in Apple and how you feel about the stock split that is going on right now. With all that being said, people, let's get into the video. So in case you don't know what is happening whatsoever, okay, Apple has announced a 4-to-1 stock split after shares surged towards $400. Now look, what is about to happen to your shares is not complicated to understand by any means whatsoever, okay? Let's say you own one full share in Apple, and at the time it splits, let's say it's $400 just to make it really easy. So you own one share and that share is worth $400. When the split happens, you will own 4 shares and they will all be worth $100. So you neither gain nor lose any value on your position in Apple. All that happens is the shares price is going to come down and you are going to have 4 times as many shares. So why does a company bother doing this? Well, if you go onto Apple's actual website, why have you decided to split Apple stock, okay? They say we want Apple stock to be more accessible to a broader base of investors. So simply put, a lot of people might not be able to afford $400 or what could soon be $450 to $500 of a share in one go. So bringing that price down to $100 without affecting the business's valuation or market cap in any way whatsoever could make it more accessible to new investors. Now in recent history, fractional shares have become a thing. My brokerage account, for example, Trading 212, offers fractional shares. I know that Robinhood, M1 Finance, all of those do as well. Now there's also psychological reasons to it as well. A lot of people might be more inclined to buy a $100 stock as opposed to a $400 stock. Some people, simply put, don't like buying fractional shares. You know, it's that simple. And it might sound silly, but I can attest to this. I know that unless it's a really expensive company like an Amazon or a Tesla, I really don't like having to buy fractional shares. I would rather pay for one whole share. I don't like scrolling through my portfolio and seeing 0.34 all over the place. That's not what you want to see. So there is a psychological element to it as well. Now you could also argue that it would make it look less attractive to some people, because some people might think that a higher share price equals a more valuable company, but that is not the case whatsoever. Just like a lower share price doesn't necessarily equal a less valuable company. But to be honest guys, Apple has done this in the past multiple times and it's worked out very well for them every single time. So they've done a 2-for-1 basis on 3 separate occasions, okay? 1987, 2000 and 2005. And their most recent stock split was a 7-for-1 on June the 6th of 2014, and it was around $650 at that stage, so it brought it down again to sub $100. To put the stock split into perspective, okay, if you had bought just one share of Apple when they went public, you would own 56 shares today. So Apple stock went IPO at $22 a share. Apple, let's say, is currently at $440. That $22 investment would now be worth $24,640. That is some tasty growth. Long story short, Apple has seen immense growth since going public. Now, if you go onto the Mac stock chart, you'll see that it says 12th of December 1980. It was 51 cents a share. That is because this entire graph does adjust every time there is a stock split. So you can just see here that since then there has literally been 85,000% growth. Pretty insane if you ask me. So that's what the stock split will actually entail. It's worked out extremely well for Apple in the past, and as a current investor, I am happy that it is happening. So just some more information on this, okay? The record date is August 24, 2020. Determines which shareholders are entitled to receive additional shares due to the split. The split date is then August 28. Shareholders are due split shares after the close of business on this date. So when you wake up August 29th, you should have 4 shares of Apple for every 1 that you owned. And the ex-date is August 31st, 2020, the date determined by NASDAQ when Apple common shares will trade at the new split adjusted price. Now quickly, I want to speak about stock buybacks, okay? And why a company actually does this, because Apple is genuinely known for their stock buybacks, okay? So, what actually is it? A stock buyback occurs when a company buys back its own shares from the marketplace. The effect of a buyback is to reduce the number of outstanding shares on the market, which increases the ownership stake of the shareholders. It's essentially the exact opposite of issuing new shares. Like we saw in yesterday's video with Virgin Galactic, share dilution is going to happen as there's more shares being put into the market. Having a share buyback is essentially the exact opposite, okay? And a company might buy back shares because it believes the market has discounted its shares too steeply to invest in itself or to improve its financial ratios. So Apple has a massive history of share buybacks, one of the best out there, especially in these big cap companies. Since kicking off its repurchase program in 2013, Apple has spent $327 billion to buy back 2.5 billion shares at an average price of $131 per share. And this is what that has looked like, okay? And we can see that particularly in 2018 and 2019, there has been mass amounts of buybacks. And we can see that in 2018, there was a rampant buyback pace due to US tax reforms. Last year, okay, Apple spent a total of $67 billion on share buybacks. And to put that into perspective, it's more than the market cap of 85% of the companies in the S&P 500. Apple buys back a lot of their shares, and that's a promising thing for investors for 2 main reasons, okay? One obviously is the lack of share dilution, okay? Shares become more scarce and therefore they should go up in value, and also it just shows Apple believes in themselves. The company has relied on its stellar free cash flow to fund share repurchases over the years, okay? So this is why, particularly when we look at Apple, seeing a good balance sheet is very important, because without it, they won't be able to keep up this rate of share buybacks. And we really want to see them doing so. But this here is really what needs to be remembered. The effect of a buyback is to reduce the number of outstanding shares on the market, which increases the ownership stake of the stakeholders. That is what we like to see. The percentage of Apple shares held by institutions is currently at 62%. So that's a very large share. That is good to see. I like to see that, because these institutions know a lot more than us everyday investors. Warren Buffett, for example, had a $35 billion stake in Apple. It's tripled in value to $104 billion as of right now. But now guys, let's get into the earnings. And earnings were fantastic. Now I actually have to be honest in regards to these, okay? I did not think they were going to be very good whatsoever, okay? And in the grand scheme of things, they weren't, you know? Compared to the last quarter of last year, even the second last quarter of last year, not great. But quarter over quarter, okay? Their EPS actually went up, and they absolutely smashed estimates, people. And we can see that for next quarter, the estimate has gone up absolutely massively. And I do also want to show you the analyst recommendation trends for Apple right now. Even as of August, predominantly buys and a whole lot of strong buys as well. No underperforms as of right now, some holds, but very much so a lot of analysts saying to buy Apple right now. So revenue up 11% and EPS up 18% to new June quarter records. That's incredible. Net sales went up all across the board, okay? iPhone went up, not by a lot, but it did go up nonetheless. Macs went up a considerable amount. iPads went up, wearables, home and accessories and services all went up big time. And if we look at the year over year quarterly results, okay, iPhone change was only 2%, okay, nothing special. Mac, 22%. iPad, 31%. Wearables, home and accessories, 17%. And services, 15%. Look at this, okay, Apple services, their revenue increased 15% year over year in fiscal Q3. And its gross profit accounted for 39% of the company's total gross profit, thanks to a lucrative gross profit margin of 67%. A gross profit margin of 67% on their services. So to be seeing them grow at these rates is fantastic. That could be a massive, and I mean massive, growth catalyst going forwards. Apple services include things like iTunes, the App Store, the Mac App Store, Apple Music, Apple Pay, Apple Care, etc, etc, all of those things. But to me, this one is really exciting. And one more catalyst that I want to speak about quickly, okay, is this new stay-at-home era we are more than likely heading into. More people working from home. There could be a lot more demand for a lot of Apple products, in particular services, iPads and Macs. And the growth year over year on these two as well has been absolutely massive, people. More people working from home will mean more of these necessary for businesses to be buying. It looks good to me. So is the fact that there is a stock split the reason to buy? No, the reason to buy is because of who Apple are as a company, and they're immense, and I mean truly immense. growth history and potential for growth going forwards. This is one of the biggest market cap companies in the world. They usually fight for that top spot with Microsoft. And they are still growing at absolutely incredible rates. And they still have so many catalysts on their side. And they have an incredible balance sheet to match it. They have proven how resilient they are in tough times with this quarter's earnings. I am now more confident than I ever have been in Apple, and I am very happy to own the shares that I do own, and I do most definitely plan on picking up more. And just one more thing on Apple being resilient and be able to keep up with the times, okay? Apple acquires soft point of service firm MobiWave. They've reportedly acquired the company in a deal which could see iPhones turn into contactless payment terminals. This lets users accept contactless payments with just their phones without the need for any external hardware, such as the ones that Square provide. According to reports from Bloomberg, Apple shelled out $100 million for the company. The deal would add an extra inducement for sole traders to switch to Apple, providing a means to accept card payments without the need to acquire a separate card reader from the likes of Square, as I just said, or I said. I didn't even hear these guys before. But it's just another example of Apple keeping up to date with the times that we are living in right now. And, not waiting, getting at it. And again, this could just be another catalyst, another reason for businesses to buy iPads, to buy Macs. But that was just one more thing I wanted to make you all aware of because it was very new news. So look, should you buy Apple because of the fact there is going to be a stock split? No, you should never buy a company just because there is a stock split. You should buy Apple if you believe in them and their long-term growth prospects, which I most certainly do. I mean, this is a company who has so many growth catalysts going for them. They have such a history of growth. I mean, immense, disgusting growth. They have an incredible balance sheet. They are keeping up to date with the times. They're amazing, okay? And on the monthly chart, up 17.34%. I mean, that is not bad by any means whatsoever, people. Have I bought some Apple? I did buy a little bit more Apple. You'll have to wait until Friday's video to find out exactly how much, but I did buy some more Apple. But as always, that does not mean that you should buy Apple. You should always go out and do your own due diligence and form your own opinions ultimately. Don't ever invest in a company just because I or anybody else on YouTube does. So don't invest just because there's a stock split. Invest because you like the company. The split could just be one more catalyst. So guys, if you have watched until the end of the video, I really do appreciate you from the bottom of my heart. The growth we have been seeing on this channel lately has been absolutely insane, and yeah, it genuinely is quite mind-blowing. As of recording this, we're just over 400 subs away from hitting 20,000, which is still somewhat inconceivable, to be honest, but we're getting there, people, and we don't plan on slowing down. We plan on keeping it going. But anyway, guys, I don't want to take up any more of your time. Thank you so much for watching till the end. If you did enjoy and you took some value, please hit that like button, subscribe if you're new around here, and drop me a comment. Those things help me out so much. I hope you all have an absolutely fantastic day. I will see you for the next video. Peace.